Today we're going to be taking a look at BlackLine's Intercompany Hub. It is the industry's first enterprise-class clearinghouse solution for intercompany transactions, handling accounting, handling reconciliation, and giving you information for settlement purposes. Intercompany represents quite a large challenge for most organizations, especially organizations that are dispersed globally, different entities, different offices, lots of high data volume, often different ERP systems, sometimes the same ERP but different instances. You might be dealing with multi-currency, you might be dealing with VAT, GST, you might be dealing with transfer pricing adjustments, you might be dealing with separate finance teams. All this can lead to significant issues when it comes to intercompany account balancing. This diagram shows you the current situation on the left of the screen. You have different entities. Communication is often via email, via telephone. There might be non-standard usage of currency rates, non-standard usage of taxation rates. There might be no central repository for document storage. There might be timing issues. One entity might post a journal in a different period to the other entity. All this leads to a situation where the intercompany AP does not tie to the intercompany AR on both sides. The situation on the right shows the Intercompany Hub, BlackLine's Intercompany Hub product. You would enter a transaction through a transaction request, or you could import it, from an existing ERP system. However you enter the intercompany transaction request, it's going to go through various levels of validation and approval. BlackLine can set fields automatically for you. It can cross-check validity of fields. It can require that one or both entities must approve the transaction. You have the ability to add comments. BlackLine will generate invoices where required. And very importantly, it will generate journals which gets passed back to the ERPs of both entities. The end result being a set of intercompany balances that balance at the end of the period. Let's take a look at the software. This is the logon screen for BlackLine. Today I'm going to be logging on as Kim Wilson, a member of the finance team. In the middle of the screen you see various workbenches, one workbench representing each area of BlackLine. Today we're focusing on the top workbench, which is the intercompany transaction workbench. At the top of the screen you notice that Kim Wilson is entered as a preparer. You do have multiple roles available. Temporarily I'm going to switch role over to an administrator to show you one of the key setup screens. That setup screen is called the Intercompany Entities Configuration. It's where you would create the structure of entities that are allowed to send charges to and from each other. For users of BlackLine account reconciliations, this could be the same as your organizational structure. It could even be different. You can have many levels in the parent-child relationship, and you can click on any level, as I'm doing here, under APAC, to see a further categorization, intercompany relationships. This is an important control. It shows you, for example, as an initiator, APAC is allowed to send charges to the following entities: Argentina, Australia, Belgium, etc. However, as a recipient, APAC is only allowed to receive intercompany charges from the Americas entity. Should you wish, you can see this in a matrix view. Using the little arrows here, you can see further information such as whether there is a requirement to generate an invoice within that relationship. Another form of control is not just the fact that you can determine who is allowed to receive charges from whom, you can also determine what type of charges. These columns on the right hand side represent different transaction types within BlackLine. You can have as many of these as you like. So for example, you can say that APAC may receive charges from the Americas region, but maybe not legal fees, only consulting fees. It's up to you. I'm going to switch now into a preparer role. As a preparer, to enter an intercompany transaction request, you would log on to this grid. This grid gives you central visibility. It shows you all intercompany transactions, which ones have been prepared, approved, reviewed, rejected. You can see this in graphical format or in a traditional grid format. Pick any number to drill into the individual intercompany transactions. Over here on the left-hand side, you see the various transaction types you would pick before you create an intercompany transaction. As I said, you could also import these if you preferred. Scrolling down the list, I'm going to pull out an existing intercompany transaction. and take a look at that. Notice at the top of the screen you have workflow. Every single intercompany transaction may be routed through several levels of review and approval. There's also a final certification status, which determines at what point those journals are going to get created. Further down the screen you have a number of fields. You can add different fields to the screen as required. Some of the fields might be manually entered, some of the fields might be picked from a drop-down list, some of the fields might be calculated. Notice that Blackline is calculating tax for you, it's calculating currency rates for you, it's also applying the correct general ledger accounts. Furthermore, once a transaction is entered and finalised, Blackline is also going to prepare journals for you, not just one set of journals, but two sets of journals, one for each entity, the recipient and the initiator. And in addition, Blackline is also going to create an invoice for you. You can create different invoice templates associated to different transaction types. So Blackline is giving you efficiency through the use of automated calculation, it's giving you visibility, and it's giving you control through the process of review and approval. Another reporting option is what's called settlement information. This is a great report that gives you a bird's eye view from a summarized level, showing the details of balances between entities. You can see this in a table format, you can look at that in a matrix format. So here, for example, you can see that the EMEA region owes the Americas region $63,000. We can switch over to a payables or receivables point of view. You have the ability to include accounts that are eligible for netting, all accounts, or just accounts that are not eligible for netting. Nice thing about Blackline is that you can take a single total balance, such as the amount owed between EMEA and Americas, and drill into the underlying detail. In this case, you can see that all the transactions originate from the Americas region to the EMEA region, and that entire amount, 63,000, is made up of these transactions. Notice that you can also mark the transactions as settled. If everybody uses the Blackline Intercompany Hub, the intercompany AP and AR balances should be in sync at the end of the month. That's what would happen with the best will in the world. But in reality, you still need additional forms of control. Individuals might have posted adjusting journals in the back end directly to the ERP. Maybe they shouldn't have, maybe they did. So there's still a place for that traditional month-end cross-check reconciliation of intercompany AR and AP between entities. Blackline has that too. It's called account reconciliation. Let's take a look at that. This is the account reconciliation workbench. This is where you would justify and explain your balance sheet account balances. Let's go ahead and take a look at an intercompany account reconciliation, which you can see down here. This is a reconciliation between Atlanta and Mumbai, India. We have the two accounts here. They should match. They actually don't. There's a $2,000 difference. You can see the two accounts listed. One is an AR account, one is an AP account. Different currencies are involved as well. There's a $2,000 difference. Where did that come from? Well, you could go ahead and investigate manually. Could take quite a bit of time because often we're dealing in high transaction volumes here. So to facilitate the process, to help you figure out where that value comes from, you can use the Blackline matching tool. Because it's an integrated system, you don't need to go separately to the matching module. You can go to it directly from this reconciliation template by clicking the link. On this screen, you set up the logic to determine how transactions between AP and AR are going to be matched against each other. Those transactions get pulled into Blackline directly from the ERP. The matching will happen based off of a schedule, or you can run it manually. You're going to be left with two sets of transactions, matched intercompany transactions and unmatched intercompany transactions. For our purposes, we're interested in the unmatched transactions. When you click on that, you have a split screen. The left-hand side of the screen shows you transactions that are in one intercompany account. The right-hand side of the screen shows you transactions that are in another intercompany account. Some of those transactions are obvious. We can manually match those off. These transactions here belong to each other. Let's go ahead and highlight those, match those off. And then you're left with the difference. This represents the $2,000 difference from that intercompany account reconciliation. At this point, what you would do is you would highlight it and create a reconciling item. You would do some coding. We're going to mark it as a timing issue. Valid item entered to India's ERP directly. Click Save. And what was the advantage from the user's point of view? Well, if we were to go back to the account reconciliation workbench, we find the same intercompany account reconciliation. That difference is now flown directly through to the template as a reconciling item. The difference is down to 0. And that was facilitated because of very powerful matching rules and matching logic we can define to specify which intercompany transactions belong to which. So, in summary, let's step back. We logged onto the system. I went over to an administrator role, and we talked about the intercompany entities configuration. Key takeaway there was the parent-child relationship, the hierarchical structure, the ability to determine what transaction types you may use, and to determine which entities may charge which other entities. You also saw within there the ability to determine invoicing requirements. We then went into the intercompany transaction workbench. I explained how you can enter transactions manually after picking a particular transaction type, how you can also import them. We then examined an existing intercompany transaction, and I showed you how Blackline creates journals, creates an invoice, and how Blackline's ability to perform calculations such as VAT, currency, and even transfer pricing adjustments. After that, we took an example of reporting. I showed you the settlement information report. And within there, I showed you how you can view this in matrix format, tabular format, and how you can drill from a total summarized balance into the underlying transactions. After that, I showed you a traditional month-end check, a month-end control, which is the account reconciliation between intercompany accounts. We leveraged the account reconciliation module for that, and that was further enhanced by the use of the matching tool to automatically look for transactions to compare against each other. So Blackline is a full solution. It's giving you the ability to create transactions, it's giving you the ability to control transactions, it's giving you the ability to store documents, it's giving you the ability to calculate values, it's giving you the ability to push journals back to the ERP, it's giving you the ability to report off those transactions, and it's giving you the ability to perform month-end controls such as account reconciliations. Thank you.